Hello, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to Smart Succession Planning for SMEs. Why succession planning cannot be ignored. Succession planning is a critical advisory discussion for SME clients. A discussion that I think you should have at least once a year with your clients to understand their thinking. It should be discussed annually, and it's about planning the ultimate exit from the business. It's about continuing to have discussions, continuity, value, and people. There's a lot of interesting aspects at stake when we look at succession planning. So the reality for SME owners is that the owner exit intentions and timings should be discussed. The developing successes and management depth in a business is important. So that's not just something that happens at the last minute. The business valuation is very important, and the risk and internal governance considerations are also very important in this overall process. Succession is not just about the owners, even though that's what we're going to concentrate on in this discussion today. But I think succession planning also applies to everyone else within the business, because one of the strengths of SMEs is training people within and then being able to promote them. So giving them an idea of where they could move to and where they could end up in an organisation is very important. And that might mean that this is the encouragement for them to undertake some extra training, to do some extra courses, to become far more familiar. And this aligns with the long-term business plan of what people are going to be equipped to handle in the future of the organisation as it grows. Succession planning is linked with business planning. I think every year when the business plan has been prepared, that the succession plan should also be reviewed to ensure that all items are under consideration. When is it planned to exit a business, especially for a CEO or a senior management team member? How will they exit? What's the most desirable way? What's the effect going to be of that exit? What must the business be looking at doing as we approach an exit? Communication with bankers and lenders, communication with key suppliers and customers can be a very important component of the succession planning process. So what's included in a succession assignment? A lot of things. And these are all items that are listed within the ESS BIZTOOLS website. What's the owner strategies, if we are talking particularly about the owner, which we are in this particular presentation? What's the strategic plans for the business? Is there a succession plan? Who's proposed to be the successor to this person who's going to leave at some time? Is that person, first of all, are they aware that they're the chosen one? Have they undertaken a training or apprenticeship to become the CEO? Do they understand the business? Do they know all of the business's secrets? Or is the current incumbent holding a range of secrets in their head? What's covered in the business plan relating to the succession plan? How many other people are going to be involved in the process? Is it a situation where a whole range of people are moving up a level? Have they been appropriately mentored and trained and understand what's involved? Has there been discussions with the management team and the board of directors and the board of advice, if the company has a board of advice? So there needs to be thinking about what's going on. What about estate planning from the CEO or major shareholders' point of view? Have considerations been given to how an exit from the business is going to fit within the overall estate plan? What's the business valuation? I believe it's very important that all businesses have a new valuation prepared annually so that there can be an appreciation as what this business is really worth. Because how is the succession going to be planned and financed? Is it intended to try and sell shares in the company? Who to? Other current shareholders? Presumably they will want to understand what the valuation is and what they're paying for. Or it could be making an approach to some external investors to come into the business. All of these matters need to be considered in developing a retirement plan. What communication's going to be given to customers about what's happening? A communication going to them indicating the long-term CEO's resigning or retiring? Is there anything within the corporate structure that needs revisiting in view of the fact that a key person is going to leave the organisation? Is there any taxation and superannuation issues? There'll be some, but which are the ones that the business needs to be considering? What about the family and governance considerations? Is there a family charter? Many small entities now, family entities, have a family charter. Now, the family charter may have a policy or a preference that a blood member of the family becomes the successor to the CEO. Is this practical? Were the other members of the board of directors and the leadership team aware of this? And have they looked at the implications of that strategy? Is there someone that can be made the CEO? Has that person been adequately trained and mentored? Or is there going to be a requirement to skip a generation? Because there are some good potential leaders of the business among some of the younger members of the family, but they're not ready yet. They haven't left high school, or they haven't finished university, or they're away on experience trips around the world and not ready to assume the responsibilities for the family business at this stage. I've seen most of those issues with clients as I think about them as I'm talking to you, bringing back some good and also some very challenging memories as to how things were sorted out. Is there a family constitution? There may well be. And again, this may be stipulating who should be the leader, but at the end of the day, we're talking about a separate entity called the company. But the family may be a very significant, in fact, they may be the only real shareholder in the business. So what the family wants will be very important. And as the accountant is performing a chief financial officer role, a very key advisory service, you need to be aware of all these problems, contingencies that you need to be thinking about as you advise your client, which was after all the business, on planning succession. And some members of the family may also be wanting to make their comments and their suggestions. And you've got to listen to them because they're all part of this very important group called the family within a family business. And some of them may be a wee bit annoying, but you just need to face up to it and work through the process. So we've set out a 5-step succession process within the ESS BIZTOOLS material. First of all, it's a SWOT analysis. Where are we now? What's the situation going to be? if the CEO resigns. And this is a good exercise to conduct annually because, unfortunately, sometimes people have a major accident or an illness and they're with us one day and not the next. So what sort of contingency planning's been put in place if this occurs? What's the mission statement? What's this business trying to achieve? Is this a personal type promotion coming from the current CEO? Would that be continued in the event of that person no longer being the CEO or no longer being with us? So what would be the redefinition of the mission statement? It's very important for everyone to identify where do we want to be, what's both personally and business-wise. Succession planning makes you think about a whole range of issues. I've talked about the ongoing annual review of this strategy of succession within the organisation already a couple of times. I think it's important that you ensure that that meeting's been held. I think an ideal time is to hold that discussion with the key people a couple of weeks before the planning for the revised business plan for the next year so that you're aware of what the intentions are as to whether the key people are going to continue to work for at least another 1, 2, 3 years. That's their intention. But what's the fallback in an emergency? In a horror situation where something happens to them, they get ill, they have an accident. So what's the overall objectives? What's the update of them after we've done this type of analysis? And as you can see, as I'm working through this product package which we have on succession planning, there are a lot of different issues that can come into play. Now, for a lot of your clients, there won't be nearly as many as what I'm raising today, but I'm pointing out to you what's in the ESS BIZTOOLS product package on succession planning. So there's some questions to be asked. Are we meeting targeted business objectives? Because if the objectives are not being met, it's probably going to mean that the company is not going to have the value that may have been assumed when the current CEO, who may own 50% of the shares, and he is contemplating that someone is going to be prepared to buy him out based on the theoretical valuation that's emerged in his head or her head. And that could be a long way different from the real situation. So we need to be looking very closely at what all this means. Has the business been benchmarked against other similar businesses, and especially the top 20% category of those businesses, so that some strategies can be developed? How is your client performing against the top 20%? Because again, this could influence the overall valuation. Are changes needed to the business's objectives? Are the succession goals still achievable? Can the owner reduce involvement? So let's look at some of the questions now from the owner or the person that's retiring. Can they reduce their involvement whilst the business continues? How is the successor chosen? Has the successor been chosen? Or is everyone waiting until the current incumbent's gone? Now, this happens in some organisations, unfortunately, so that there's no process of introducing the emerging leader of the business in the marketplace. Is the management team strong enough to withstand the loss of the key person? What fallout could occur within the business? You notice in public companies at times, some of the banks that when the decision's made on the new chief executive, some other key executives seem to leave. And it's not only in banks, it's in other major companies. 'Cause they were obviously people who thought that they were in line for the top job appointment, or in their career they'd had some disagreements, misunderstandings with the person who is now going to be appointed in the CEO's position, and they don't want to work for that person. Is this likely to occur in your client organisation as well? So what would be the strategy if this happened? And this means that you have to have an awareness of what's happening in your client's organisation. Some people may have already basically told you that he or she becomes the leader, I won't be here. What's that going to mean? Another big question that can come up when a founder or a key person is leaving who may already be on the board of directors, do they retain their position on the board of directors? Is that desirable? Or are they going to be seen as interfering from sitting in the position as an ongoing board of directors member? Has a succession plan been developed? And that can also involve the buy-sell agreements. What's that process going to unearth? And wills and executors can also have a bearing, especially if the current person in the key position has an accident or dies suddenly. The executors of that person's estate could be involved in a lot of the deliberations, especially relating to what the value of the business owned by the now deceased former CEO was or is. Bankers and supplier reaction can be also very important. The bank and key suppliers may have been quite happy to continue to deal with your client whilst the founder or key executive was alive and with us. But if that person was not going to be there, is that going to change the attitude of bankers, lenders, suppliers, even some key customers? Because they've got past experience with people who may become the leaders of the business and they don't want to be involved with them. And is there informal mates agreements that maybe are not known or not fully known, that the current owner has developed over the years? It may have been repaying a favour. Are those special benefits for mates going to continue in the future? It's important to guard against complacency in a business, because selling or transferring a business is rarely quick. Poor preparation reduces the business value. I think it's a good idea for this annual business valuation to be undertaken and it to be used as a means of comparing the valuation one year to the next and reward the company, the directors, in the valuation process if they have implemented some of the suggestions you've made. The average valuation in Australia of a private company is 3 to 4 times the after-tax profit for the year. But if a company is trying to conclude an initial public offer to be listed on the stock exchange, the average seems to be at 9 times after-tax profit as the listing valuation. Sometimes it can be a lot higher, of course. So what's in between a valuation of 4 as compared to 9 on that steps? Now, to be listed on the stock exchange for the previous 2 years, the company must have been audited. So that's obviously 1 or 2 of those extra points. But the others, I think, are attributed to what's going on in the business. Has your client adopted the 52-week business enhancement system, whereby annual business plans are being prepared, succession planning's been examined each year, business valuation's been prepared, business plans been updated and prepared every year? predictive accounting reports, budgets, cash flows, key drivers, and projected balance sheets are being prepared, analysed, and discussed. You're the storyteller on that process to communicate what's going to occur. This is what the company's going to look like in 3 years' time, as long as these achievements are made. And then we turn to the frequency of reporting, and that's vital. There should be a weekly performance report for all business operations. It's what the big businesses do. That's what SMEs should be doing with today's technology, today's communications. So that allows problems to be highlighted within a couple of days of the end of a trading week so that they can be fixed, not left dormant in the system for what could be 12 months or more and could have caused all sorts of problems. And then monthly financial accounts compared to the budgets and also compared back to the weekly performance estimates so that if there's mistakes being made, they're corrected, because management should have confidence that those weekly performance reports are accurate. There should be a report to the board of directors that you would prepare and a updated 12 months cash flow forecast. It's a real document, not prepared in 2 minutes, but analysing what is likely to happen, which could be affected by inventory levels, by what's happening with debtors' days outstanding, what's happening with a capital expenditure program or a research and development program. And if the client has introduced the rhythm of meetings, daily, weekly, monthly, that are so popular in larger businesses. Now, if all that's been achieved, you'd be quite entitled, and the client and the shareholders would be very looking forward to an evaluation to maybe be going to 5 or even 6 times the after-tax profit as a way of saying this is what this business is now worth. Because if a large corporation was looking at this business, that's the way they would assess it. So what's your role in all this? I think it is to coordinate everything we've been discussing, and there's a lot of tangents to it. The annual succession planning meetings, the realistic annual business valuation, benchmarking against the top 20% of participants in this industry, not the average, but the top 20%. And our colleagues at Tax Fitness have a fantastic business benchmarking program that you can use, which is identifying your client's performance against the top 20%, identifying value improvement strategies, and you're acting as the key business advisor, and you're known as that. So we support you in doing this with structured questionnaires and templates, which I've referred to many of those today. The SWOT analysis tools, succession planning guides, ownership, legal and governance resources, and detailed succession planning and reference papers. They're all part of the package to assist you to go through and understand. So why do advisory services matter? Why are we concerned about you being able to adequately support your clients on succession planning? The recent report by Intuit QuickBooks indicated that only 15% of 500 SMEs that were interviewed, so only 75 out of 500, viewed their accountant as being the key strategic partner. And when I read the definition of key strategic partner, it was obvious that they were referring to someone performing the type of services that I've outlined to you today as a virtual CFO. Now, advisory services will help close this gap, because unless accountants can get this 15% figure to at least 85%, we are not going to be relevant when it comes to advisory services for SMEs in the long term, because other people will absorb that role as business consultants, business advisors. So succession planning strengthens the long-term client relationship. At ESS BizTools, we were originally going to offer a 50% package as part of Black Friday. But then we started reading the latest information from the Australian Small Business Ombudsman and come to grips with the very dismal situation that probably 1 million SMEs are facing in Australia. They obviously need more support. And this was really evidenced by the Intuit QuickBooks survey. Only 15% said that they were receiving the type of services that they really needed. So we have discounted our packages by 75% for the Christmas New Year promotion, which has started now but concludes on the 19th of January. Because we decided to make that extra contribution, 25%, to assist accountants to really grasp this opportunity. You will get a return on investment if you use our package with just one of your clients in any of the 35 different issues that our financial forecasting package will enable you to offer to your clients. Why? Because the subscription, because of this significant reduction, is only $1,050 for 12 months access. You've got to be able to offer these services for clients and earn an attractive retainer from your client for those services. We also have the starter and advanced packages. The starter package is primarily designed for bookkeeping firms and very small accounting firms who are embarking on this journey of offering advisory services, which can be built up over the years. And the advanced package is the all-round accountant's package to deliver advisory services. But the main one is the financial forecasting, because it's covering a whole range of issues: research and development, succession planning, the full Chief Financial Officer services, the innovation journey concept, where we go through 9 key steps that you can offer to your clients. So the next steps, please go to our website, www.essbiztools.com.au, and click on packages and pricing, and you can view and you can immediately go ahead and subscribe. And we are going to be having a major training program, 1 hour for 4 days in a row in late January, so that we will be welcoming all of our new subscribers to our system and giving you a complete induction on the processes that we have utilized within ESS BizTools. And we'd like to see you present, or your team present, in those presentations. Or if you want to get more information, please send me an email, peter@essbiztools.com.au. I'll take this opportunity of wishing you a Merry Christmas and a happy and safe 2026. Goodbye and stay safe. Thank you.